What's up, guys? It's me, Charlie, and it's a new trading week. It's a new trading week, which means it is a new week for us to make money. Now, for today, 18th of August, we do not have any major data, right? We do not have any massive news over the weekend, right? The Trump-Putin meeting actually turned out to be pretty muted, pretty uneventful, right? Basically, it's just saying that, oh, we did not reach a conclusion, but things are going to work out great. So I don't think there's much to be read into it. Okay, basically it's just your typical, PR kind of statements. So in terms of events, we do not have anything interesting over the weekend. And for today, we do not have any key economic data as well. The earliest key economic data will actually be tomorrow. Canada, all right, Canada's inflation. Now, the last critical data that Canada released was actually 2 weeks ago, right? We are using their previous data as guidance, right? Because that's the only thing that we have released on the 8th of August, right? So it was their employment data, unemployment data. So I don't want to delve too much into the details of this data, but basically the number of jobs, right, or the number of employment change actually fell, right? It was forecast to be a positive 15,000, but the number of jobs actually fell, right, by 41,000, nearly 41,000. So by right, it should reflect very, very badly, all right, on Canada's economy. But interestingly, the unemployment rate, all right, was actually good. Right, was actually good. The unemployment rate was forecast to be 7%, right? But the actual unemployment rate was came in at only 6.9%. Nice, right? So things things actually got better than was actually better than forecast, right? So overall, it's more positive. If you were to ask me, uh, the number of jobs, right, actually was bad. It actually looked bad. But sometimes this can take into account, can take into consideration of temporary jobs, summer jobs, vacation jobs. So in my opinion, it's not that it's I mean it will be good if this is positive as well, but to me it's not as important as the unemployment rate, right? So in my opinion, the overall economic situation, the overall employment situation in Canada is fine, right? Canada also came out to say that, oh, our economy is fine, everything's okay. You can search for these reports on Bloomberg yourself. I don't want to delve too much into it, right? Otherwise, we will spend a lot of time on history, right? And if you are an informed trader, you will have probably read those reports already. So I don't want to go into those things, right? So we fast forward, right? Sorry, not fast forward. So we then move into our forecast for tomorrow, right? So I do believe that when the economy, sorry, the premise is given right now the current situation, the current global situation, which is we have higher interest rates. Okay, under such scenarios, I do believe a healthy economy, a thriving economy typically lends to high inflation, right? So I do believe the CPI data is going to come in high. It's going to be green, right? Or at least I believe it's going to match this forecast of 0.3%. So typically when we see green numbers for CPI, right, that typically leads to bullishness for the currency, right? So let me just do a quick recap. I believe I'm reading the data as good employment translating to good economy, good economic environment leading to inflation, right? So I'm expecting this to be green, and if this is green, okay, green or at least hits forecast. So if I'm expecting this to be green, our theoretically translation is the currency in this scenario, Canadian dollar, loonie, would rally. Now, that is in theory because there are two major things that is holding back the Canadian dollar. The first being Trump. Trump has imposed tariff across the world, right? But he has been exceptionally harsh on on Canada. As to why, I don't really care. I don't really care to it's just a fact. That's it. Okay, I don't really care why Trump is going nuts on Canada, right? Some of his motives are a little bit unclear, right? But he's very harsh on Canada, so that can lead to the Canadian dollar being depressed, right? So any rally may not be as strong. Okay. Second thing is crude oil prices. Now the loonie is very linked to the price of oil, right? It has a very strong correlation. Uh, so let's take a look at what has happened to oil. Oil has basically been uh, going down, right? Very aggressively since the start of the month. All right, as you can see, very aggressive, right? We do have one green day whereby it recovered plus 1.8%, but yeah, no, it's it's overall it's bad, right? The start of the month was at 70 bucks, $70. All right, $69, $70, and yeah, we are down, yeah, we are down big. All right, to sum it up simply. So the oil situation is not very good at the moment. Uh, to make it short, right? It's not going well, the oil situation. So the loonie isn't going to be strong as well, right? Because uh, weak demand for oil equals to weak demand for Canadian dollar. The global demand for the Canadian dollar is largely driven by oil. So yeah, so these are the two possible things that can hold back any Canadian dollar rally that can, uh, impose, all right, that can serve as a ceiling to any Canadian dollar rally, even if the CPI comes in strong. Okay, in terms of how the Canadian dollar is doing right now, right, let's take a look at it against the yen, right? So AJ, EJ, GJ is around 0.2% thereabout. Canadian yen is the loonie yen is also performing around the same level thereabout, right? So right now it looks pretty okay. It looks pretty fine if you were to ask me. So we do not have any outliers effect. We do not have anything that screams out at the moment, right? Although, yeah, as you can see, oil is, yeah, I mean, it is pretty flat at the moment as well. I'm not going to make a mountain of molehill and say that, look, it's red. No, I'm not going to do that. However, I do believe that oil for this month is going to be on a bearish trend. I think it's going to, at the end of August, we're going to see it under 62 for sure, right? So ultimately, the question is how to trade the Canadian CPI data. In my opinion, if you're looking for a very short-term trade, then you would have to be cautiously bullish. You would have to find good opportunities to enter, right? To enter your Canadian positions, your Canadian long positions. However, if you do not mind holding the trades for a longer time period, I do think that you can go in, right? Because the tariff, the oil price, they are pushing down the Canadian dollar, right? When oil prices recover, when US Canadian relations are improved upon, I do believe that we will see, Canadian dollar gaining strength, all right, recovering, and thereby, making a marked progress against other currencies, right? So that can be a longer term, uh, that can be a trade that plays out in the longer term. So basically, it depends on how long is your so-called investment horizon, your trade horizon. If you're a very short-term trader, then yes, you would have to be cautiously bullish, right? Very selective in terms of your entry, right? If you are looking to trade this Canadian CPI data. If you're someone who don't care that much, you're more of a swing trader, right? And in any case, Canadian dollar has pretty high interest rate, right? And you don't mind earning, you don't mind waiting because you can earn from the sweat. uh, then I would say that you could look to pick up some Canadian dollars right ahead of this CPI data. That's all from me, folks. Good luck, have fun. I personally would actually be cautiously bullish because I don't really enjoy holding my positions for far too long, right? So I would be looking for good entry points to go long on the Canadian dollar. As to whether it will be against the yen or against the dollar, let's see how things pan out. Let's see how things pan out, right? Because I'm looking for a good entry point. That's all from me, folks. Happy trading. Good luck.